What's going on, everyone? And welcome to this week's live backtesting, where we're going through week 41 and the missed trades that kind of came out of that week. Week 41 was the second week of October, and just following on from the first week of October, which I was comparing to September, which is obviously the first week where I was trading the six-figure plan. The first week obviously saw a lot of high impact news, and so less positions taken. Did also take losses in that first week of September. Similarly, in the first week of October, the actual trades that I took were no, I think it was one loss in October as opposed to two in September. But then the weeks following on from that were all, profitable weeks. The market played out better. It kind of showed its hand after that NFP. And then, playing out in the rest of the week, we had some good trades. And that's been similar to this month. The first week, as I mentioned, one loss. And from the second week, recoup those first week losses, and then last week this week we've kind of just been banking profit. So currently up about 2% for the month, and holding some positions that could pass phase one of the 100K challenge. Let's just jump straight into it. We've got 6 missed trades across Euro USD, USD JPY, and Pound JPY, all through various sessions. And I will look at them, I don't know if chronologically is the right word, but obviously starting with the earliest one being Euro USD short on Tuesday, then going on to UJ, which is actually also Tuesday. And then, Pound JPY, UJ, GJ, EU. And again, these have kind of been identified, but the purpose of the session is just to verify whether these were actually missed positions, or was there something about the position that didn't fully satisfy the criteria of the plan, as well as then to see how it would have done in management. Let's just jump in. I thought there was something else that I wanted to sort of focus on or observe, but now that's it. And we will start with Euro USD. Euro USD Tuesday London session. Let's come to the true open. Backtesting something else there. So as far as this setup goes, what we're looking at from a daily perspective is just this pullback into discount. And we can see we had achieved discount, but obviously still looking for price to head lower. At the time, we were still trading in this order block here. I'll just run it there. And then looking for price to potentially come and sweep this liquidity to the downside here. And we know we had a daily order block resting at this low here. So let's clean that up. So so again, in the moment, there was the potential of this moving higher from here, given that we had mitigated the 50% as well as in that order block. So there were valid reasons to take price higher from current market price, but then also just monitoring what had happened prior to that, kind of sweeping that liquidity, and then displacing to the downside, strong close below these lows as a potential shift of structure. Obviously coming onto the 4-hour, structure was to the downside, still bearish, strong impulse. And then what we were getting was a pullback into this one-sided fair value gap. Let's see the lower time frame. We said this was a short position. So yeah, so from a setup perspective, when we look at it against the plan, yes, we have mitigated EPD, current 4-hour trend, still counter trend to that daily. And then obviously, considering that we are in a bullish order block, I was also looking for long setups, but for that to happen, given we weren't in alignment with the 1-hour range, IPDA would have had to be clear. That's your interbank price delivery algorithm, and it wasn't on the day. So I was clear that I wasn't looking for longs. I was only looking for shorts. What are shorts? Shorts are, again, then counter trend to that daily bias. So we've got a counter trend 4-hour, and then my entry is counter trend as well. And so what I would have required was the 4-hour or the 1-hour to be within the key indicator area during London or on New York kill zone. And then I could proceed to trade parameters. So we've got that pullback into the fair value gap. That's that key indicator area. And so coming down to my trade parameters, looking at whether the 1-hour is in alignment with the 1-hour range. We are. And then requiring price to be at EPD to then look for the protraction, key area mitigation, or time-based liquidity sweep. And then we can go to entry confirmation. And so just firstly marking my true open. And then the 1-hour range was, it could have been taken from multiple points. So obviously this was the start of that impulse to the downside, which would have given us the lowest possible point for equilibrium to be achieved. There was this point here, a bit deeper, and then obviously this point way up here. I can't remember exactly which point I had on. If I'm looking at the 4-hour, that's probably the most logical point from the 4-hour. But then again, this makes it a 4-hour range and not a 1-hour range. But if we do look at where the lowest point was before we pulled back and then continued lower, it seems to be somewhere in this region here. So I'm inclined to put it down there. But then if we just follow structure, we had this push lower, up, down, created that low, up, and then that's where we broke that low there. So that seems like a objective way to go through that process of trying to figure out where to put it. So I've got my 50% there. I need it to be an EPD. And then, yeah, let's just see how this plays out. Okay, so it seems we're getting the protraction at the open. It can come down to the minute 15. What I just want to do is put this on the 15-minute too. I'm going to delete this because I know it gets violated in any case, and it's just kind of messing the chart. So we've got that protraction higher. We've got, look, prior to the open, we had the time-based liquidity sweep of these highs. And then obviously formed minor highs, which we then swept as well. So once we have now reached, yeah, that is literally EPD. We've got a full engulfing. Let's come down to 5-minute. Do we have, there's no key indicator, there's no clear order block there. There may be something on the 1-minute. So yeah, it's a 1-minute market structure shift. And if we take it from this point here, it's our run of liquidity there. Break of structure to the downside. So we've got that micro time frame confluence, and then we'll look to take that there. Would have probably extended this to 10 pips seems appropriate, because I mean normally maybe would have had 7 there, so maybe adding 5 onto that gives 130, 13. I think with that sort of wider stop, but it's, yeah, look, we have more than enough room to the downside. And now just in terms of targets, because that's something I also just don't look at when I identify this, I just look at, is there an entry? I know I was looking for this to come way lower, but arguably something that I think I made note of last week was when I'm trading counter trend positions, go for the conservative target. So target your minimum 1:3. In this case, I know that that's how it would have played. It would have played out if I did that, but I'm just going to put this at the targets that I would have in the moment, just to gauge how realistic the outcome could have been. And so I know I would have targeted these lows. Going forward, that's something to consider. You know, if, because this is a what, 1:8, not impossible, but kind of just uncommon, and especially when we are trading counter trend sort of positions, we want to be more conservative with our TPs. So, but I mean, for the sake of backtesting, it's fine. It's basically a 8.5 R, but I know I'm gonna have that at 1 R. For my half risk, and then that at about 2 R for partial profits and break even. Let's see how this goes. Okay, so we've got 1 R achieved. We can take some risk off the table, move that to half risk. Okay, with 2 R achieved, we can move stops to break even, and then we close half the position. So we are now at a partial profit point. If we had to come back and hit the stop loss. And this, okay, I'll take it back, just because I did want to test how UJ also did, because we're kind of heading into Tuesday session now. But I mean, at this point, we kind of just hold it to full TP. And I can tell you for free, it doesn't get there. So this seems to be moving sideways now. And what R are we heading? A good 4R. I would have saved myself, I think, a lot of pain by just setting this at 3R and just kind of leaving it. Look, it is still coming lower. There's more that I'm capitalizing on this. I just know it doesn't reach this level within this week. I think we start to pull back or form a larger correction at this point. But, you know, we've achieved almost 5R at this point. That was CPI, a lot of volatility. Look, stops are well protected. And I know Friday there's a potential position as well. So I'm going to leave this at break even for now. I'm going to extend this so that we know where price, where we're looking for price to come to, but I'll leave this up at break even. And then I'll take it back to Tuesday where we can then look at USD JPY, but we know we're still holding this, right? So if we just come back to this, the reason was I was actually in a meeting. So in a meeting when C could not execute. But then the annoying, I guess, thing around this trade was that I got desk entry area decided execute position as I was couldn't. So I got back to the desk, saw that entry confirmation was achieved. Price was still in my area, but I didn't feel confident in the position, so I didn't execute. And that's where I think I went wrong with this position, where I should have just put the position on, put my stops, given them room to breathe, and just seen how it would have played out. Because either way, I would have taken the trade if I was at the desk an hour earlier. And if price is still in my entry area, then it's developed slightly, which it will do naturally, then it's almost not for me to decide that because I'm not too comfortable with how it's developed to just automatically assume that it's not going to play out. So we're not sure of the result yet because we're still waiting to see how this plays out. But I just want to look at USD JPY long in the meantime. So now we actually have this up here. So yeah, we had the fair value gap here, and then price pulling back into that, the EPD area that was there. So again, this similarly to your USD daily is in actually on its way to equilibrium. So we've just established a trend towards EPD. The 4-hour is counter trend to that daily bearish bias. So 4-hour trend was bullish in this case. And so we've got resistance entries that we're considering. And for that, I just need price to be within a 1 or 4-hour key indicator area. We got the 4-hour fair value gap. And then we are in line with the bullish 1-hour range, but obviously need that to come into or protract at market or kill zone open, and then sweep liquidity at the minimum for us to take this higher. It was UJ long, yeah. Now that we've swept liquidity, we are technically a go for entries. We've either got this order block here, but we do have a fair value gap there. So if we close above there on the 5-minute, then we can execute long on the 15-minute if we get a reversal candle that meets the criteria. We did close above it there. So that point. We've got the doji wick. So yeah, we were essentially just waiting for that confirmation. This can be seen as a double opposing now, if you will. These equal highs are fine. And I say this again in hindsight because I know that I did. So this was a missed position. Similarly, 10 o'clock, I was in the same meeting. So I missed 2 positions at that time. But I did manage to get an additional entry here. I think it was later on the same day, if not the following day. And the targets were in the same area. But for this, just because I think I was targeting also a 4-hour, the base of this 4-hour order block here, which was a bit too optimistic. So I was targeting that, which look in hindsight looks nice. It's almost 5%, 5R, but in reality, these equal highs are more than enough. My minimum risk to reward is 3R, and I'm getting a 3.8R here. So more than happy to take this and to see how it plays out. Just want to see the next. Okay, so it's Wednesday, the next position, and then it's Thursday on UJ. So we can see how this plays out for the rest of the day, actually. So, as always, we've got 1R for half risk. Then we've got 2R for partial profits. Okay. 1R. Take some risk off the table. Okay, I will test this. So we'll same reasoning, but I think unlike the Euro USD position, by the time I did get to this, okay, no, so unlike Euro USD, when was the position I took? I think it might have just been later on, like I took a later entry here, but I missed this first entry. But, you know, there was still an entry that met my minimum criteria just later on. So I think I did ultimately execute on this, if not later on or later or the next day. But yeah, I just noted that this was a missed position. Yeah, in position, we're still holding. But once we get into about 6 o'clock, then I'll start to look towards pound JPY for that long position. Okay, so we've got 2R, so we can move stops to break even, and then we've taken partial profits at this point. Okay, it's about 7 now. Pound JPY short, potential position there. I wonder what that was. short. Pound JPY short. I doubt it. I'm honestly doubting it. Might be a long. Don't know what I was recording. Let's see. Because look, for me to be short, it's, and I want to look at this objectively. Is price out of mitigated equilibrium premium at discount? Yes, we have. Unlike UJ, we have got a minus swing on GJ, direction of the 4-hour trend in. That's counter trend. That trend is still counter. And then is my entry counter trend or pro trend? For me to be short, it would need to be a daily or 4-hour mitigation of the mitigation of a daily or 4-hour order block. And as far as I can tell, there's no order block. Could we argue that this is an order block? Could we argue? Perhaps. Is it a mitigation or is it just forming? It is a mitigation. Okay, I'll entertain it. Okay. Are we okay if we come down and say that is my trade in alignment with the 1-hour range? Given the sweep of liquidity to the upside there, we're arguing that this is a minor range on the 1-hour. Perhaps. Oh, this is wild. I didn't even see this whole time last week. And it's actually a very valid setup. Because yes, we've got this as the major primary 4-hour swing. That obviously then is also 1 hour because there's not really any higher lows along the way here. But we did sweep this to the upside before distributing and displacing lower. And so a very valid sort of swing or range to the downside. Coupled with this newly formed 4-hour order block, and you've got yourself a valid setup. So you can say yes, we'll be looking for protraction, then we'll be looking for this time-based liquidity sweep here back into the order block, and I think that's also going to be supportive then of that IBDA. Oh, and those are clean highs. Those are very clean highs. We may have something here. Let's see how this plays out. Okay, so we've already swept that. I should be ready to take this at the open because we've technically got this entry confirmation now. Okay, no. How would we play this? I think this is supposed to be a long. The setup's just very confusing, and I'm gonna move on to the next one because I don't have time to entertain how I was confusing myself in the moment way back when. But if I'm not mistaken, I think I'd meant to say long here with the sweep of liquidity here to the downside. Obviously, knowing that from the 1 hour range perspective, then we tap into that 75% area, 70.5% area again. The resistance entries we know are valid. I was currently holding a long position also at this point because I took a long setup on the Monday or the Tuesday last week. So this was looking at this from a scaling perspective, but was not yet at break even, so couldn't scale in, but then missed this opportunity to scale into the upside. So I do remember this now, and it was actually not a short. It was in fact a long. Reason was management rules. With risk exposed. What is going on? Yeah. So yeah, technically. So at this point, and with that move to the upside before, we had almost kind of confirmed that we've started this trend where we came down into the fair value gap. We had a bit of a consolidation, but then we eventually broke up to the upside, and then we had another consolidation, and then now we were starting to continue higher. So this was a continuation of that, where we swept liquidity was also these 1 hour protected lows, if you want to call it that. And I think there may or may not have been, I think I pulled a fib from this 1 hour level here to this high on the day. Yeah. And then that aligned quite nicely with the 50% area, kind of resting below that time-based liquidity sweep. So apologies for that confusion. I seem to have confused myself, but I think the entry was on this first candle post-market open. And I think it's just looking at, we did have the parameters, and I do like when it's a one-sided fair value gap that gets mitigated with displacement, because that just adds quite a bit of strength to bias the narrative. And we then would have had that there, even stops protected just below there, 450. And then targets to equal highs, same 3.7, 4.5 to these old highs. To be honest, probably would place it there. That's where I've got my current targets, and I don't think that's too optimistic, just given that we've had these near misses of these old highs, but we are continuously forming those higher highs. If I want to be conservative, I guess there is the more conservative target, given that this is a counter trend, and I kind of need to reinforce that. So I will set it at the counter trend targets. I think we've already achieved one, if not 2R. 1R about there. and then yeah, 2R there. Technically, stop is at half risk. And then the next position is Thursday, landing kill zone. So we can just see how this plays out. So we've got 2R achieved. Move to break even. So at the moment, I think we've got a few positions running, if I'm not mistaken. So we've got this UJ running, which at the same time, obviously with GJ running quite nice, sitting at 3.39R. We've got GJ now running. So at about 2R max. I would have banked 2%. So technically would have been at 6.6% with a bit more running in profit. And the reason I'm kind of, even though I did capitalize on the positions that were in the market, I took GJ, I was in a GJ long position from previously in the week. I'd taken UJ long, 2 positions actually. Obviously the one I think was just a wider stop because I got to the desk late because of that meeting. But I'm also just trying to observe how the positions I took compared to the positions I've missed, because that will also inform me whether I may be rushing into positions and it may be better to wait for positions that offer better risk to reward to execute on those, because then it's a difference. You take the same move on the same pair, but at different points in time. One yields you 3R, the other yields you 7R. It's like, does a bit of patience pay? Is kind of what I'm trying to kind of get to, which is, yeah, hopefully what I'll see in the session, just based on whether we do see the outcome of these positions. So yeah, holding this next position, and all of these are kind of still holding. There's Euro USD short as well. So technically actually would have closed out 3% last week, so it would have been up 7.6R. And arguably with what I was holding on Euro USD, which I think was like 4R at the time, and then the 4 or 3 odd R on UJ, and then 2R on this, I could have closed them all and been at 10%. So yeah, I think in hindsight, already kicking myself that positions I missed that could have led to the passing of phase 1 that I didn't capitalize on. But that's fine. I think I heard in a podcast recently that scaling up in trading is a bit of an exponential yield curve. So it's like you never really like regret or like feel like you missed out on anything, because the opportunities that come or that are just around the corner give you the required utility in any case. It's like it's just a matter of, shit, I could have done it a month or 2 ago. But when you eventually do it, you don't really even care at that point. It's like it doesn't really feel like there's a massive difference. But it's like, obviously in the moment when you see what you could have done back then and you're not there yet, you feel like you're kicking yourself. But it's like you're playing this game where there's like an abundance of opportunities constantly each week. Rather be aware that there are these kinds of opportunities, so that going forward you can capitalize on the next one that comes, because this one may have been missed, but the next one is around the corner. So it's like, but you need to be aware of it so that you can start making the decisions to then self-correct so that you don't make the same mistakes. if that makes sense. So UJ's closed out for full profit. Let's check on our Euro USD, which, yeah, no, it's very fast still on this day. On this day, it wasn't. I think only by Friday, it's somewhere down there, so that's fine. And then pound JPY seems close, but we have another position that I think we need to look for. It's USD JPY long. Thursday London kill zone. Then there's a UJ short as well Thursday in New York. So we'll start with the long on UJ. And we are holding long on GJ. Long Thursday London kill zone. Okay, actually, I should be journaling this. That's fine then. It's irrelevant now. Can I move that there? But now essentially, okay, I was looking for a long position on this. Still need arguably our 4-hour and 1-hour key indicator areas, and do need this to be within either 1-hour range. Well, yes, because it is within the 1-hour range, I need that to be at EPD. So this is arguably its own little 1-hour range, and I think this is what I was kind of alluding to on the day. But I'm just looking at what's kind of possible and where I may have been looking for a setup. Because if I pull it down to here, okay, maybe, depends on how this kind of forms now. We are still early on, but let's see. I don't think it's that extreme one. It may be this one here. And then we know we've got this fair value gap here. Arguably, we also got this fair value gap here, but that one doesn't really lie within any EPD, because whether EPD is there or at the next point here, you know, I'm hesitant to put it at these kinds of levels here, because it's not really any sort of clear structure. But what I'm just getting at is that this is kind of lying in the middle of nowhere, so I can almost rule it out for now. But yeah, just curious to see. So we do kind of sweep that, which is what I was thinking I was looking for. Got this time-based liquidity sweep here. So from the plan's perspective, mitigated EPD, still counter trend. We are, the only key indicator area we have is this 4-hour, or rather 1-hour fair value gap that's resting within the 50% area. So that's valid. And then from a trade parameter perspective, we've pulled this fib, we've got our 50% area, we seem to be protracting, and we've got the time-based liquidity sweep here. So we can look for, yeah, we can look for entry confirmation once we get into this area, once we reach 50% rather. Okay, so now we've reached 50%. We've tapped into the fair value gap. I see. No, this formed after my kill zone close. So at that point, so technically not actually looking for anything beyond 12 o'clock, obviously until 1. And yeah, no, there was nothing really. I might have been looking at this here after this time-based liquidity sweep, but obviously needing the 1 hour to be at EPD, that condition wasn't satisfied, and so couldn't have taken that in any case because it just didn't meet the plan. So I'm not sure if anything does come of this. I think, yeah, this would have been a valid, obviously push higher that I would have taken a trade out of, but it's just kind of in this no man's land time frame where I'm not taking any setups until the 3 o'clock open, which we obviously then come a lot lower. Just going back to so pound JPY then, because I think that's we have a short during New York kill zone, which we are at now. Yes, but we have stopped out at break even. So we just missed targets, even though it was set at a conservative target level. We've just missed that. So we essentially closed out a partial profit share. UJ long was not valid. And now we are looking for short plays now in New York. I just want to see how this is going to start protracting, because I may have been looking for longs and I may have been confusing myself again because there's no order block that we traded out of. Yeah, yeah, it was probably long. Because we're back within that fair value gap. I think there's a bit of a time-based liquidity sweep here on the low time frame. There is. Again, this is a long, not a short. And the reason was the same. My risk management rules didn't allow for scaling because I only moved to break even on GJ. Now, well, yesterday, Monday, today's Wednesday. So this was, yeah, essentially at this point, we had kind of started forming this bearish range, which we've seen this week we violated, but taking it off the main or primary swing that we were looking at the time, we can say this is an optimal trade entry area. So resistance entry, we've got the protraction, we've got the time-based liquidity sweep, and now we're just looking for entry confirmation to the upside. And that looks like we have got it. Yeah, even if it's stuck, I mean, we do have a key indicator area and validation here with the two-sided fair value gap there, but we could have had the 5-minute market structure shift as well, which is also a 1-minute market structure shift effectively. So to our same entry point, 2.35. Nah, so this doesn't meet the minimum 1:3 risk to reward criteria of that setup, even if we take it to the optimistic targets of the old highs. If I take it down to, our conservative targets where, we failed to achieve last time, which would have been the go-to targets, given that I would have assumed that this was just a pullback to that break-even area to gather liquidity before the next run to the upside, then I would have just said that there, anticipating price to continue to the upside. So what we did do, which I like, is that I think we just swept this to the downside and then we displace higher. So yeah, just characteristic of that generation of liquidity resting below, an old low, an old significant low, that is. Even if we look at the 1 hour, we had wick there. So know that there's orders resting below there. We've tapped into that and now we displacing to the upside. But it's just unfortunate that this didn't meet the criteria of, or at least the entry confirmation. We got through the high time frame criteria, we got through the trade parameters, but the entry confirmation also comes with its own set of requirements. One of them being I need a minimum 1:3 risk to reward to take a trade, and we didn't get that. So unfortunately, did not execute there. The loss is a Euro USD short. I'm just mindful of my laptop battery, and I don't have my charger, so I'm gonna fly through this. So excuse me if it feels a bit rushed, but I just don't want this to die. And then I'm not done kind of going through it. London kill zone, Euro USD short. Okay. Mm, ah, spread would have taken me out. Yeah, I've got minimal spread, but not zero spread. I think I've got zero commission on my current account, so this would have been a partial loss. The reason for this Friday, no, it was just no forecast, to be honest. There's no particular reason that I can think of. I was at the desk. I just remember Friday I wasn't very active because, oh no, I had full risk exposure on at the time. So, so this CJ Long, no trade. Actually move those up here. To maximum exposure. To GJ and UJ positions plan. The result was a partial loss, but we did. And then the result, I just want to see where EURUSD ends up for the week. If hypothetically, or look, I can even just take it back and see if we've reached this. So we have now, today, actually, we've reached that, which would have been our full take profit area on what would have been a long and very grueling position on EURUSD for an impressive 8.4R. Oh, that could have passed me phase 1 and 2, bro. So I think what this kind of illustrates is patience does pay. And while it was, 1 week where the trades I took ended up being, look, trades that I'm still holding up now, that I've been holding for some time though. USD JPY tomorrow will be about a week, and I haven't even secured 1%. Still holding, half risk has been applied, but we just missed that 2R, and then pound JPY. Yeah, this looks like it's coming for stop loss, but which is at break even. But I mean, it's like there were so many other positions that I could have taken that obviously because of my plan and the exposure that I try to limit, based on the risk that I have on the table, that, I couldn't take because, we try to remain disciplined to our plan. So in that sense, it's like it was the 1 week where I missed out on some good positions that would have resulted in, full profit 8.4R, full profit UJ. It was about 3 point something, or let's just, even if we make it flat at 3R, it's still about, what's that, 11.4, 11.5R. Partial profit on GJ, which was 1%, 12.4R. Then a partial loss on EURUSD, 12R, if we call it flat, obviously minus that 0.5R. So a lot of potential missed out on because of these setups that I'm holding that used up my exposure and obviously limited me from increasing that exposure over the week. And it may not be to say don't take those trades, but because you never also know which is going to be the one that plays out. But I think there's lessons to learn in terms of how long should I hold a trade before I decide that it's maybe time to manually close this because it's not going anywhere and it's causing me to miss out on other opportunities. And I think those are things that I'm going to seriously review at the end of this 20 trade sample set, because otherwise I can really spend a whole week holding two positions and missing out on another 5 to 10 potentially. because of these two, depending on how this week goes now, given that it's we're halfway in the week, and I haven't taken any other positions, but I can now because the ones that break even. But still, it's been a whole week of just kind of having to painfully sit through these trades that just aren't kind of going anywhere. So it's like, should there be a point where I cut that off, and then identify other opportunities? Because that's the whole reason why I diversify across pairs, is because when one's pair's moving slow and there's no opportunity, or there's nothing there that meets my plan, then there's opportunity in other pairs. And so I think that's a big takeaway from this week's backtesting session. Yeah, slightly longer session, but I hope there was some value that you guys took away from it. And as always, guys, don't forget, consistency is the choice that you make when you start doing the things you know you should be doing day in,